Friday, February 17th, in front of a 3-day weekend. President's Day on Monday, no markets, or not all of them are open. So we always start out with the S&P 500, the spider, talk about the stock market indexes for a general picture of the overall market, up, down, sideways, whatever. And I'm going to go into futures after that. So on the left is your 1-minute chart for the S&P 500 spider, SPY, for today so far, and a little bit of the end of yesterday. And we have a flat bottom right triangle. I'm going to see if I can't get rid of those announcements. Okay, and usually the flat side is the side that's broken on flat-sided right triangles. It could be flat top or bottom. So there's more pressure coming down than there is support, and it appears it's going to start to slip off a little later. If we break the bear trend line off of the highs of today so far, then, there is a gap to close. We did gap down this morning. Can't forget about that. Gaps are almost always closed. I've said that innumerable times for the many months I've been making these recordings, and they are usually closed, and usually within a few days, if not the same damn day. So don't forget about yesterday's lows being the price at which the gap will be closed. We could go down more first, which looks likely at the moment. Now, all of this is not really damaging to the overall picture. And the overall picture, as you can see, ladies and gentlemen, and if you have any questions, email me at info@ersignals.com. The bigger picture is that the bear market of 2022, starting in early January, lasting basically the whole year, formed a head and shoulder bottom in June for the first shoulder low. October 13th, the October lows, I forecasted in advance, 1 to 2 months in advance, and it happened beautifully this year. Doesn't always happen as obvious and great. Turned the market around. So far, so good. And it was the head of what we now see is a head and shoulder bottom with the last shoulder low in late December. For the spider, that was December 22nd. Shoulder, head, and shoulder. We went up. We crossed over the 200-day Dow Jones long-term investor moving average, so that's turned bullish for weeks now. We crossed the major long-term bear trend line going across the tops all year long last year. That's behind us. And most importantly, and now the highest level of support that we're going to be touching on to first as we dribble off a little bit here, maybe another 4, 5, 6 points, is that neckline. The neckline on the head and shoulder bottom should never be crossed below, but sometimes it is. The worst part is it never should close below the line. Even if it gets below it, it should pop right back up above it, usually the same day. Maybe it'll take until the next day. That's it. That's all I'm going to give it as far as elbow room. If you get below approximately 398 now, and that will be the price level at which the line is at, 398.50, let's call it, or tomorrow, which is not, until next Tuesday. We have maybe 5, 7 more points, 6.5, 6 more points down from where we are right now to test the line. From a long-term point of view, that is a major buying opportunity. Low risk situation with stops below the line, not too far away. Upside potential is a test of all-time historic highs in January of 2022. And that is my minimum objective on this bullish pattern, which is working great so far. There is, again, nothing really wrong on a longer term basis with this market dipping down for new lows for a couple of weeks right now. It would be nice if we also had an oversold condition at the same time that it came down to the neckline, if it can get that low to begin with. And now, because we're making new lows for a couple, 3 weeks, it looks a little more likely. To be honest with you, I did not expect it to get here to begin with. I thought that last week's low, I think it was Friday, of last week, was going to be the last low before it started to accelerate into new high ground, which did, past tense, not happen. Today's a lower low than last week. Again, minor bearish technicals, nothing interfering with the long-term bullish expectations, period. So from where we are right now, we could turn back up any old time. I'm not quite sure. I don't see any bullish formations at the moment and reasons to do that yet. But remember, on the left, we've got the 1 minute chart, and we want to break above that blue line. That could start something a lot more interesting. We have 10:39 California time. So we've got 2 hours and a half almost left for the day. Plenty of time to go significantly higher or lower. Probably not going to go sideways. Before a 3-day weekend? Nah, not going to happen. We're down a decent 3.5 almost at the moment. And that's not a lot. But the key here is the big pattern. And remember, we got that gap to close. We're going to be coming back up above today's high soon, which, hell, it could be today. It might be a couple of days from now, trading days from now. All right. Obviously, I'm bullish and very bullish for the year of 2023 and beyond, probably. Let's go look at the DIA, which has a similar situation at the moment. We've made a new low now for a few more weeks. Nothing disastrous. It doesn't seem to be actually following through to the downside any significant amount. There's no, crashing market here for quite a while. We've been bouncing off of today's lows, which is a little bit of a support level. But the bigger picture is this is a pennant formation, which started back in early December. And that in itself is the last shoulder low of the large head and shoulder bottom, of course, starting in June, and then the October lows, and here we are. But the neckline on the DIA slants upwards, and that's not uncommon, but it is more common to see it slant downwards on head and shoulder bottoms. But this one does not, it slants upwards. So as time passes, it gets a little higher, slowly but surely. We need to cross over 351 approximately in the next few weeks in order to break out of this formation to the upside. Still very bullish, still long-term, still a head and shoulder bottom. Nothing wrong with this, except it's just getting damn lazy. Sideways for longer than I would have expected. The QQQ has done a very good job of breaking its neckline and major long-term bear trend line back on January 23, tested the support levels and bounced out of it really nicely just a couple of days later. January 25 went way into new high ground, and those are new highs since August 26 of 22, several months. So this is progressing great. Yeah, it's a little frustrating to see it go up and down and up and down and back and forth and not trending, basically, for the last 2, 3, 4 weeks for the averages and the indexes. So we need to bounce off of support, maybe go a little lower, maybe get oversold, have a bullish engulfing would be great. An ER buy signal would be great, like on October 13th. Back here, that was incredibly profound, and I screamed bloody murder on that day. Go listen to the recording. And I'm trying to pick for you guys the turn here. It's a little bit squeaky for me. I'm not quite sure. So I have to not be particularly adamant about my comments, a little bit wishy-washy. Sorry about that. It won't last long. And it's possible to see minor new lows again, like I said. It's possible this thing is going to turn right back up again because it's in a support area. And that's what support areas are supposed to do. Stop declines and turn it back up, like it did in the same support area a week ago. But there was no follow through. We had new highs for the whole trend. It stopped and came back down again. We're all guessing, of course, that it's because of interest rates and what's going to happen with the inflation and the major reports coming out, but you don't know what that's going to be. I don't know what it's going to be, and I lived through these reports for over a half a century. So I don't listen to them anymore. I see it coming usually in the price action, and that is the stock market indexes for you. So I am bullish, period. Whether we have a bit more of a break, not that much, soon, in the next few days, maybe a week, But within a week or 2 or 3, I'm totally expecting to see new highs for the whole trend. New highs for many months. Okay, futures markets. Now, there's some significant activity going on in here, especially for some of the energy markets. Corn has stopped at its major bear trend line at the beginning of the week, couldn't get through it, and has dipped down. But it's boring. There's not a lot of activity here. It's been going sideways for a while, but keep your eye on that major bear trend line, which is drawn off of the April highs. Yeah, it looks like the last trading day of April. And it's a good line. I mean, you got several points on it, not just 2 or 3. Next chart. And I do think it's going to break out to the upside. Next. E-mini. It is the S&P 500 Spider, E-mini, Micro Mini. It's all the same. Different numbers involved. Same pattern, same technicals, just simply different numbers. Is in the process of making minor new lows for the last couple of weeks. And everything I said about the SPY stands for the ES, electronic S&P, E-mini, period. Also, all of its close cousins. So, bullish, trying to pick a turn here. Wouldn't be surprised if the market jumped back up again before the end of the day, but it hasn't started, so I can't say it looking better yet. And again, I wouldn't be surprised if it slipped off slowly, so I'm not doing too much momentarily with the indexes. Next chart, cotton. Not too much going on. One of my subscribers asked me to add cotton. I had forgotten to do so, so here it is. Sorry, whoever you are. It is boring at the moment, but we are going to have sooner or later a major breakout one way or the other, because you can see it's not a very wide trading range. We have broken the trend line running across the lows, so that started to move down some more in the last few days. Wednesday it was broken, went down a little bit more Thursday, and today, Friday, a little bit more. But now we're getting oversold. And we're not really below the support areas. We're just below the little bull trend line. So I'm expecting it to bounce back up slightly in the next couple of days because of the oversold condition. Next chart is live cattle. No comment. I'm going to pass on some of these. Coffee, new highs, looking good, but getting close to overbought, uptrend. This is sugar, sideways. No comment. Soybeans, slow bull market. Next, cocoa, a little bit more aggressive bull market, but overbought, so watch out. Don't go running after markets up or down, especially when they're in overbought or oversold conditions. Next, bean oil, boring. Silver, boy, it has gotten oversold almost every single day now for a couple of weeks, period. And at any moment, I expect to see this thing turn around and rally significantly, but it will be short-lived. This thing looks like it started something a little bit more bearish. I can't really tell quite yet, but I do think it's about to rally. Next, OJ. I warned you about the extreme overbought condition that we saw at the end of last week. This market got into the very high 90s for the relative strength index, which is on the subgraph. It is a custom version of Wells Wilder's RSI, relative strength index, and he taught me RSI personally, 1-to-1. Yeah, I'm that old. Too bad. So I have plotted it differently. I've used different calculation timeframes, and I have different points of price action that I use for my RSI levels. Again, that was incredibly high for several days, mid to high 90s, and I warned you that it was about to crash, and it took 2 days to retrace most of the overbought days, just in 2. Now it's bouncing back up again. The trend is up. The trend is your friend, and I think we're going to see new highs again. Plus, there's that gap to close. Orange juice. Next chart is wheat. We got the top of the market at the beginning of the war way back in March, was it? March 8th. Wow, what a fantastic red ER automated sell signal. Superb. Everything about it was great and quickly. Big money, real fast. Gutsy, that's for damn sure, but it was right on the money. At the moment, sideways, boring, long-term bear, high-grade copper, slowly up. Next, 10-year notes. Now, this is important. The long bond, 30-year long bond, and the 10-year notes are obviously interest rate vehicles, and we have minor new lows for the last 2.5 to 3 months. But we're oversold. So it's going to start to bounce, and it may have been today's low that is the low. We are now slightly higher on the day after making a new low for many weeks, 1 month, 2 months, about 3 months worth. So I'm looking for a little rally here immediately. Next is the bond, 30-year long bond. It didn't quite make lower lows, but it's a new low for this little move down in the last 6 weeks. Oversold is the key here, and it's a new low, but a higher current quote. I think it's about to start rallying as of now. Next chart, platinum. We caught the top of the market and it has not stopped going down since. We had one false start buy signal in the interim. That did not last long, a day or two, and then new lows. Now, the problem is it's oversold again for the last few days, and we are trading in a very broad area of support going all the way back to April. So I'm looking for a rally, probably up to 985, and then a new short sale. Next, heating oil. Dropping off pretty good today. May even make a new low for weeks and weeks. New low close likely for the last 2 months. If we make it below early December's lows here at 257-ish, 258, that is going to cause a domino effect. We're going to start banging into the support level at 232, and that's going to, in my opinion, give way, and that will be an extremely bearish, long-term, major bearish breakout to the downside. I don't think if it holds at all, it's going to hold for very long. We have a great sell signal on the top of this rally only a few weeks ago. We have a great sell signal almost at the top of the whole damn chart. And we have a great sell signal on the top of that rally for many months earlier and a couple of months afterwards. So my signals have been pretty good here. And we had a buy signal on the bottom for just a few days. Remember, these red and green bars are the buy and sell dates. Those are the ER signals. Next chart, crude oil. Same comment, except it's already got a head start. You've already made new lows for many months. Now for the last 2, it's been going sideways, stalling out, but there's no higher highs of any consequence. We don't have any lower lows either. So you got a sideways channel, sort of. I'm looking for a major downside breakout closing below 70 is going to do the job. And it should start a very big break very quickly. Slam dunk, maybe to 60 in a short period of time, from drop $10. But that hasn't happened yet. But I think it's going to probably next week. Remember, it's only a 4-day week next week. Next chart, gold. We caught the top of the market with these signals. Outside down day, overbought conditions, sell signal, bingo. And that's why I invented this trading system. It's 100% automated if you wish, or you can use the signals the way that you want to manually. But the whole idea is to remove you, the weak link, because you are a human being and we are psychologically bad. When things look good, they're bad, and when things look bad, they're really good. This activity of trading is a counterintuitive activity. You have to think, like I like to say, bass backwards. Never mind, you figure it out. Next, natural gas. What the heck can I say? Down, down, down. Next, live hogs. No comment. Next, corn. We started here. I'm going to end here. You guys have a great 3-day weekend. Talk to you on Tuesday. Enjoy your 3-day. Bye-bye.